Hello everyone, I hope you are doing well. So today I'm recording one of probably the last educational trading video, but not the last trading video, because I will start doing something else. I will move more into, live trading recording, like ICT does, the tapes. And I will not record I will not stream them live, but I will be recording myself trading live, and afterwards I will share. um, of course I will cut the video because if I'm recording 3 hours of analysis, or waiting for my alert to pop, etc. But yeah, I will try to cut them and uh, make them quick, just so you can see my my decision-making process and how I apply everything I have taught you about in this YouTube channel. And yeah, I think I will be not as perfect as ICT does, because he really knows the market perfectly, I would say. I will make some mistakes, but also you can learn from my mistakes, and you can see maybe some patterns that you have, but that you are not seeing in yourself. You can see it maybe in someone else, and you can recognize those patterns and say like, oh, I do the same mistake. And yeah, you can learn from it, of course. So as I say, it's probably not the last, educational video, but I don't think personally that there will be a lot more content, educational content, to share with you, because personally I feel like I don't need anything more. I just have to apply what I've given you, and I found consistency with that type of model that I'm using, the liquidity, inducements, and fair value gap, etc. from ICT. And yeah, why would you like to look for more if you have enough, to be consistent? Sometimes less is more, So, but this one I want to share with you because this is also a powerful shift in market structure that I use since maybe no more, yeah, 4 months, something like this. I wanted to make a video about it before, but I was like, yeah, maybe it will be too much shift of market structure types, to understand. But as I hide no secrets, I want to share it with you today. So this is an easy and objective shift in market structure, and the last I will share with you, I promise. So I call it the last shift in market structure, just to simplify it and to recognize it, to differentiate it from the others that I taught you. So this one is using intermediate term highs and intermediate term lows. Let's go. So the characteristics of this shift in market structure, it's very useful in sloppy rangy market. And I'm talking mostly of sloppy rangy in the 1-5, small time frame, or when the liquidity is clearly designed. So you will see what I'm talking about in the examples. Personally, I use it mostly in the 1 minute time frame, but like other concept, it must be fractal. It makes you enter very precisely with a confirmed entry and no subjectivity. You never miss the move if you are trading at the right place and the right time. And of course, unless you take the final objective, it's still valid. But once your final objective is attained without coming to your entry, it means it was not the right entry type, probably. So there is no point to force, remember, if you have seen my video about mindless trading, forcing always result, in a loss or in bad decision making. It must be effortless, always. So the only concern, like always, is to trade in the right direction and at the right place. So if you didn't see my first video, my way of trading, I recommend you to watch it before continuing this one. Okay, so there's no better way to explain it than with an example. So this Friday, 2 days ago, so the start of the day, 8 Paris time, this was a H1 order block, which created the down move, and when we started at 8, you see we just went with, for me, if there was an entry possible, at least we needed to retest this breaker if the bias was buy. But since we just came and formed liquidity without retesting this, for me, I knew the bias would be sell. So would I sell there because, for example, there's a break of structure, etc.? No. You see, any type of shift in market structure, whatever you are using, it will not work unless you use it at the right place. This is the most important thing. Here you could find one of my shift in market structure type, I'm sure, but it's not the right place. So you will get stopped out for 100%. So people get trapped, London Open, people are selling from this order block, and boom, we take buy side liquidity, we take the stop losses, and there are still, those stop losses are still unmitigated below. So we arrive at the H1 OB, we start getting a reaction. I don't really like this price action, so I did nothing there. But now we started to create some fair value gaps, imbalances, okay? And we retested, very important, this 5-minute order block, which was responsible for this break of structure and take off liquidity. Why is it important? Because people will look for a buy in this area, okay? So what does that mean? It means that their stop losses will be there, or even there for people who want to be very conservative. But yeah, mostly the liquidity will accumulate right there. So some people will snipe from this order block, but remember, some people will wait for confirmation. And the confirmation is a break of structure. For example, this range from high to low, which broke this structure, if we break it, people will start looking for buy right there or whatever. Okay. And so now I have explained the scenario, why I wanted to look for a sell, and now I will show you the shift I'm talking about. So simply, when you know you are at the right place and it looks rangy like this, you just take, first short-term low. So each low is composed, each swing low is composed by, 3 candles. So this candle should be higher than this low, and the candle at the right should have a higher low also to form this low, So this is a short-term low. This is an intermediate term low. Why? Because we have a higher low at the left and the right. And this is also, it's tricky to see this one. This is also a short-term low. Okay, so now you have your intermediate term low, which is confirmed, because an intermediate term low can exist only if you have a short-term low at the left and at the right, not before forming this one. So if we didn't have this candle, which take the low of this one, and this candle, which is forming a higher low also, it wouldn't be a valid intermediate term low. Okay, it's valid because we have a short-term low at the left and at the right. Now, once you get this intermediate term low, I put a line with shift in market structure marked. So once we break this intermediate term low, what you are looking for is another short-term low, this one or this one, and you put your Fibonacci. So I just put the 0.5 because this is the only one that matters in this shift, okay? And you try to find something meaningful above the 0.5. Something meaningful, there are 3 things you have to look for. It's either an order block, like this, or an unmitigated fair value gap, if there was a fair value gap above, but here, no. Here's the fair value gap, it's not above, we are right inside of it. Or you can look for liquidity, like, wicks or something like this. But here, here above the 0.5, we have a very clean order block, which is an order flow, which created the order flow because you see this order block created a new low. Then we came to retest and form a second order block, which created another new low. And this stands above this liquidity, which is formed. And you see right there, we didn't break. We didn't go below and take the stop losses. So this is still valid. If we would have taken the stop losses, I wouldn't be as certain to take this trade. But still, you remember, the stop losses we are targeting are there mostly. And all this is liquidity also. So I would recommend probably taking some Porsches, at this level. But personally, I held the trade until this. Then I took all of my profits, even though it went probably 10 or 15 pips lower, but it doesn't matter, So how you enter? Well, once you have your zone or your fair value gap or your stop losses area, your liquidity area, you just put your entry right at the zone. Of course, you take the spread into consideration. So my entry would have been a little bit lower. And I personally put my stop loss above because we never know, if it wants to take this as a liquidity. Okay. As I told you, I'm not as perfect as ICT, So I always I'm always careful. And this is a safe stop loss. This would be a real invalidation point. Here, if we came here, probably it wouldn't be an invalidation for me. It would be still okay, because we are above the 0.5, okay. But whatever. And yeah, it came right away, retest, and we went straight down. I want to point out a second entry using the most powerful shift of market structure type. You know, if you didn't watch my video about this most powerful shift of market structure, you can click on the right upside corner into the information. I will link my video about this type of shift in market structure, so you can see it also. But this market structure consists, this SMS consists of taking the last order block that took the liquidity, so the last piece of liquidity. This is clear order block. People will want to buy if they are looking for a buy setup, you know. By fear of missing out, you know, maybe it will not come into this order block. So this is the one which broke the last high. People look for a buy. You wait for one candle close, one bullish candle close, and you sell right there. Boom. Okay. So this is it. Now let's see another example the same day. So this Friday, but New York session. So New York session, we took sell side liquidity. Okay. And sorry. And we apply the same shift in market structure type. Okay. So you wait for first high, you know, short-term high. Then you have this intermediate term high, but you also have this short-term high. You can use whatever, you know. What's important is to have an intermediate term high that is surrounded by two short-term highs. This could not be intermediate term high. This could have been if the price went below and formed, you know, another shoulder, what we can call it, a short-term high. But it went up. So this count as a short-term high, okay? But what's important, we don't care if it's a short-term, you count it there or whatever, you know? What's important is an intermediate term high surrounded by two short-term highs. And, you know, we took the structure. You take the first swing high, which forms. This is it, you know. And you put your Fibo 0.5. What is below 0.5? You can either trade. So all this is liquidity. So you can either trade if you want really to not miss the trade, you know. You could put your order right there if you really don't want to miss it, because this is liquidity. This is an order block that people would want to buy from. So you can say this, but as there is a trend line liquidity, it would be like 90%, let's say, it would go at least until this line of liquidity and then go up. But if you want to be even more precise, you take the order block, which was responsible for taking this low and then for returning, you know, and creating a new high. So personally, this trade I did not take live. This was a back test. Personally, I would have put my order right there, just to be sure to be in the trade, you know, to not miss the trade. Again, you have a second entry with the most powerful SMS type. Why? So you see, this order block is responsible for taking sell side. And we have formed also another breakout structure, internal breakout structure, by this order block. Okay, people will be 100% looking for sell right there, liquidity above, and you have a fair value gap. You enter. You could either wait for the one candle close, one red candle close, and trade from there, or when I see a fair value gap, I don't wait for the close. I just trade from the fair value gap. Okay. So, and then it just went up, you know, and I would put break even once we start taking this liquidity or this one. But yeah, if I'm trading from there, if we take this liquidity, I would be break even there. Maybe for this entry, I would wait maybe this one, you know, because we never know, we can take, and but normally when it goes, you know. It can, you know, stay there for the 40, 30 minutes. And you will see in the example after. So you see, it's very objective. You cannot be subjective in this shift of market structure. So this is an old example. No, it's not 7 December. It's a September example. So same process for the scenario. This is the 15-minute chart. I decided that my direction for the day would be buy because double breakout structure. So people will be looking. So you see, this is a clear high to low range. Here it is less clear, of course, if you take from there to there, but still this order block is unmitigated above this liquidity. So people will want to sell from there, which is fine, you see. And you have also second breakout structure, which is a confirmation for people to sell from this order block or from this one or this one or this one. You know, as I said in my video, my way of trading, you know, you just see when there are many unmitigated order blocks, it's probably all liquidity, you know. They put this just to trap people into selling there and there and there and there and there. Lastly, so all stop losses are above this. Now, we go into the 1 minute. So the open at 8. I remember exactly the feeling I had this day because I knew I was looking for a buy, okay? And here you could say it's a shift in market structure. Look, you have short-term high, intermediate term high, and short-term low, or this short-term low, whatever. You could say, okay, easy. I could buy from there to there, FIBO. I think 50%, it would be a buy from either this fair value gap or this order block, whatever. But you see the importance of trading from the right place and the right time, you know, the right price. So you can have whatever shift you want. It could be looking perfect, whatever. If you are not trading at the right place, your stop loss will be taken out. So here it's a trap. It always, very often, forms a trap before doing, you know, the real move, what I call the real move. So here, you see this shitty price action, very shitty. And when you use this type of shift, so short-term high, so you see, we have accumulated. So if you take like the power 3 from ICT, we have accumulated buys. Stop losses are there, boom, we manipulate, and now the move happens, you know. We distribute. So now that the move can happen, you can look for a shift in market structure. Intermediate term high, short term, and short term. Okay. Boom, we break it, we form a swing high. What is below? 0.5 liquidity. I saw it from there that we started forming these equal lows. Okay. So my buy was ready since here. So since 9:15, 9:20, whatever. My buy was ready right there. Okay. At this level. And from 9 until 12:30, so 3 hours and a half, you have to wait. And of course, you have to control your emotions, because look, let's say my order was waiting there, and boom, we start breaking some liquidity. I could have the fear of missing out and start looking for a continuation there, or even, you know, buy from there, whatever. You can find, you know, when your mind is focused on fear, you can find the 100 scenarios just for, you know, for looking for a buy and not miss the move, you know. You know what I mean. But if you stay true to your analysis and to your shift in market structure, which is objective, and you never miss in this type of structure, and if you are right, of course, at the same time, you should wait. My order was still there. I didn't move. So of course it took 3 hours, 2 hours and a half to trigger my order. And then it took another hour of waiting, you know, between break even, profit, loss, break even, profit, loss, etc. It's very painful if you are looking at the chart, you know, if you are staying in front of the charts, it can be very painful. And this is what is testing your confidence in yourself. Because you could say like, yeah, one break even, one retest, second retest, okay, now I can put break even. But you would have taken break even. And so this is what will make the difference, you know, between a trader which is confident in his abilities and a trader which is not, you know. You would have taken, so same thing, you looking at the same scenario, a trader which is confident would have taken one trade, this one, no break even before this liquidity is taken, okay? Because most of the stop losses are above this one, this high, okay? And we did not take it. We induced more people to sell using this order block and this break of structure. But, and you know, the trader which is not confident, not only he would have taken break even, but probably he would have taken losses trying to buy from there, you know. Then boom, he says, okay, it's still valid, I will buy from there. And maybe after taking a break even, he would think, oh, maybe it's a sell, so I would try to sell from there, you know, even changing the direction of his plan, initial plan. And yeah, so you could use this wick, which is like a rejection block, as a perfect entry. But we are not looking for perfect entries. We are looking for consistency. And if you don't want to miss the move, I recommend putting your trade, at this line, just below. But if you count the spread, you can put it at this line, you will be fine. You see, it's only 4 pips. Counting the spread, it's only 4 pips stop loss. You don't need to have a 2 pip stop loss, You must not focus on big risk to reward. You must focus on positive risk to reward, like 1 to 2, 1 to 3, 1 to 5 if you want. But there is no point for aiming into a 1 to 100, if you hit only once every month, or every 6 months, and then you just lose 10 times in a row, or you take break even because you didn't take profit at 1 to 5 or 1 to 10. So that's it for this shift. So this shift gives you a clear and objective way, not only to enter a trade, but to also see what the market is actually doing, trapping people. So it gives you patience if you follow strictly this shift, and you are not getting trapped. No FOMO, no fear of anything, no fear of losing. And in a rangy market, yeah, just think about this shift. I know there are a lot of types of shift in market structure that I shared with you. This can be tricky, but even if you enter based on something else, another shift, for example, in the first example, my first entry was this entry. Then I took break even. Then I thought, okay, I will take this type of entry, and I entered again there. But my first entry, it was this. Why? Because we had this low, we rebalance, and we create another fair value gap, and we close below, creating fair value gap. So I entered right from this fair value gap. But when you see it is not continuing, it came back to my break-even entry. And I didn't try to sell from there or from there, I just waited to see what it wanted to do. And then I thought, okay, maybe it will do a breakout structure. After all, this is liquidity. And then I put my order right there. Okay. So whatever your entry is, you can still adapt, and make it a good trade. So thanks for watching. I didn't remove my Instagram, but just to tell you that I'm out of social medias for at least 6 months, maybe even the whole year. Just to invest most of my time in productive things. Not that Elysium Instagram was not productive, it's not that, but I'm not posting anymore, on Instagram. I'm focusing mostly on my YouTube channel, because this is where I have the most views, people who are watching, people who are aware of my existence. And then I'm trying to develop, on YouTube. And, Instagram is full of people who are looking for quick money, quick things, surface. For me, Instagram is surface. So even though you can find surface also on YouTube, I think people go on YouTube more for education than for, just diverting themselves. Now that you have TikTok and Instagram and all this, less people will be distracted on YouTube than on Instagram and TikTok, etc. So you can still visit my website if you want to look at the articles. But as you have seen, I'm making videos on some of my most important articles that I wrote. And I really recommend you, as always, to take a look at the mindset area. And as I said in the beginning also of the video, I will start doing some live tape recording, so you can see what I'm doing with transparency. So of course, I will not show my platform of trading. It will be on TradingView, but the result is the same. What I'm taking live on TradingView, I'm taking live on my FTMO platform. And I will be transparent regarding this new live tape recording. I will not only give you the live wins, I will also share with you some of my live losses. And because all the tape recording and all this you can see on YouTube, mostly they are about winning trades, and this can be misleading because I think even ICT himself, he takes some losses. Maybe he see no points of sharing his tape recording of losses and whatever. Everyone wants do what he wants to do. I'm not here to blame anyone. I'm very grateful for ICT sharing all his knowledge, because I don't know if without his fair value gap model of 2022, if I would be consistent or trade consistently for 10 days in a row, or a month in a row or whatever. So if you have any question, like always, feel free to ask. And of course, if you leave comments, I'm always happy to hear it. If you have any suggestions, if you want to share your gratitude, whatever, you are free. I hope you enjoyed this video, and see you next week.